Good afternoon, traders. This is Tony D from the Easy Markets Dealing Room with a special on Easy Trade and how to use it to protect your day trades. For those of you who are long the Aussie or short the Aussie at the moment, you've seen a lot of movement here, and currently we are in the middle of a little bounce in a downtrend. So if you're looking to sell this but you're not sure how high the bounce is going to get, you think it shouldn't get too much higher but you're not sure, you want to be short for the European session as the China-US trade wars are potentially beginning, and potentially we're going to break down below 74.10. Okay, but this little bounce has given us an opportunity to get in with the trend. And so say we go to sell the Aussie dollar here, the biggest issue that you have is that perhaps the market isn't ready and might not go down right now. So if you want to get protection for 6 hours on your day trade, you can go and sell the Aussie. All right, so here I've just shorted the market there. I've got a short for one standard lot there, and then I'm going to go to the Easy Trade here, see the paying, how much does it cost for 6 hours of protection right now. That's going to be 9 pips, and so I'd click higher, same size trades. And so if I go to my open trades now, I've got, let's get rid of that one, that's from earlier. Alright, so we're short Aussie in the spot market, and we're long Aussie with the the Easy Trade for the next 6 hours. So if the market was to go up, all the loss would be offset by this Easy Trade, and the most you would lose would be the spread. So 2 pips here on the Aussie and 9 pips here on the Easy Trade. So total for 6 hours for a whole session of London trading is going to be 11 pips. That's the maximum loss you can have for today. What we'll do is we'll come back in a little bit later. We'll add another video onto this video, and we'll do an update in about an hour and a half when the London market starts to make a move. We'll see how this strategy works out. And the good thing about it is no longer can you get into too much trouble with your trading, especially if you do it at the right times. Keeping the costs minimized. Great if you've just if you're having trouble picking direction. Great if you are new to trading and you want to minimize your maximum loss for trading for the for the whole of the London session there for to 11 pips each day. You can use this product to help you. Alright, so we just opened them. The market hasn't moved enough yet to make these move around, but we'll come back to this in as soon as the market starts to move one way or the other, with a little bit of an update on how this went. Alright traders, I'm back. So we're about 2 hours later, and the European session is well underway. The DAX is open, the market is moving, and the Aussie dollar is falling. Now, if we're looking at our situation, originally we went short in the spot market, and we have that long protection. Now the first thing we're going to be doing here, the first move that we can make now is bank this profit, $100, okay, and we've still got 4 hours left. Okay, 4 hours of protection. And what we're trying to do here is, if the market was to get back to our entry point, which is 74.50 on the Easy Trade there, 74.49, we can reset the exact same trade. Alright, now the situation about allowing you to get in and out of a trade is we've only now lost, if we closed everything, $34. Yeah, but in the very short term, the market's found a little bit of support, and so what we're doing is allowing an improvement of our entry point, potentially back towards the entry, and also if the market was to head higher, right now we still got 4 hours for the to make money from the long option. Okay, so we've improved the potential return here just by keeping an eye on the market, and the original plan is to go short, but the market isn't really moving that quickly lower, so perhaps we're going to have a bit of range bound, and what we're trying to do is maximize how much money we can make with the range bound market. So worst case scenario, like I said, is you lose the 11 pips, but we just got 10 out of the market, so the worst case scenario now is that we lose 2 pips So 9, we just got 9 on the market, so the worst we can lose now is 2 pips from this trading session, as the market hasn't really moved aggressively lower. So perhaps we are in for a little bit of sideways trading in this European session. I'll be back a little bit later for a final update to see exactly how we went in this 6-hour option, but it does give you a lot of a lot of different strategies you can use inside it. This is just one of them. Trying to make money from the market both going up and down, or just not moving too much. What's the best way to maximize your return? Alright traders, back with another update here. We have the short euro in profit, but the euro is turning around. So what do we do here? How do we maximize our option? What we do is you go in and you hedge in that profit by buying the exact same amount that you were in for. So this one was another 100,000 one. Okay, so just for the next 4 hours, I want to make money somehow out of the option. You can milk it, extract it. If I'd hedged it in a little earlier, then I would have booked in that 10 pip profit. Now the reason is that, you know, if you close out after 2 hours, when it was up in 10 pips profit here, you know, you get your money back. Or 12 pips profit, yeah, you get your money back, but that's not the aim. The aim is not to get your money back, the aim is to make money. So we made 10 pips so far from the trade around the Aussie dollar trade here, and what we're trying to do here on this top one is trying to make money from the market going up or down, just volatility in general. You're trying to make money here. So either, you know, we get a nice rally here in the euro, or it sells off. If it sells off, then these two will match pretty much, so you won't lose any more than the original premium, but because the market found a little bit of support, just wanted to play long just in case we do get that rally back up towards that 116. We're just trying to be a little bit nimble here. If the market was to go down, worst case scenario still just going to lose 12 pips, less than that actually now, probably around 10 pips all up. So this is, you know, compared to normal trading where you are, if you're trading standard lot as well, it can be quite scary. When you're trading relatively heavy positions, to be on the hook for only 10-12 pips maximum for a section is sort of what we're trying to work around here. You know, limiting your losses while maximizing your profits as the market moves around and changes direction. You can see these are perfectly hedged. We're not losing or winning anything, but we did pay that premium to get involved in this particular option. Now, what happens if the market was to shoot higher? You know, to 116.20? Well, in the next 4 hours, well, the option stops losing money at 115.92, so you can't. It doesn't go negative. Whereas this one will go positive and keep on going positive all the way up to 116.20. On the downside, this one doesn't have a cap on how positive it can get. This one doesn't have a cap on how negative it can get. So there is, you know, you can you'll be matched evenly on the downside, but on the top side, you've got that where it does go past 92, you start making more money than you risk there. And so in that particular scenario, you can be a little bit more active. At this particular time though, we're just trying to get the market to go a little bit higher. I'll probably be out there by about 115.90, and what that would do is give me another 12 pips, pay for the option, give me about 3 hours then of free rolling on both of these to try and make money. And they're going separate directions a little there, so one of them probably in the last 3 hours would make money. Well, let's give an update when that comes through, if that's possible. Cheers. Alright guys, finale here. Just to summarize what happened, we had 2 trades running last night in the example. One was this one here, the Aussie dollar and the euro dollar. So the total loss there from the options itself was 294, and we did 3 day trades around it. Now you saw me close out the $88 Aussie dollar profit about an hour in, and then the market went up a little bit and I sold again, and because I still had another 4 hours left on the option, and by the time the option expired, I liked the look of the Aussie dollar position I had, so I kept it open as a normal day trade. And then this morning the market was lower and made new lows in the cycle. The trend continued, and so we closed that out for 360 profit. Now the euro dollar rallied, and so the option, which was euro dollar down, lost money. But at just before the expiry there, about an hour before the expiry, I closed it out the opposite day trade to make 340. All right, so the total profit is 803. The day trades, the options didn't end up making money, but the day trades well and truly did because of the volatility. Now the question is, this trade here that I let open, I held this open for another 12 hours after these expired. Was it protected during those 12 hours? No. Okay, but this was just an example of how you can let the day trade run at the end of the option if you like the direction that the market's heading, and if you like the look of the trade. It just becomes a normal trade without any protection. Whereas there's definitely no reason that you have to close at the end of the expiry, and if you're liking the look of the trade, then you can let it run to the take profit targets that you're looking for. And this was just the previous low that we closed out at. So that was the reasoning behind letting it run, and that's going to be your you can do this as well yourself. You can let the trades run or close them all out at the end, just to have a bit more of a clean picture. If I closed them all out at the end, then the profit would have been smaller because the Aussie only dropped later in the day. But all in all, definitely wouldn't have lost money. Alright, so it's the euro alone made enough to cover both the options, and the Aussie dollar at 88 was enough profit there as well. Okay, so look, it is definitely an entry management tool. The proposition is that you can't lose more than 12 pips on this on the euro for the 6 hours. You can't lose more than 9 pips on the Aussie for the 6 hours. So therefore, with these counter trades, if the market ends up moving more than 10 pips on either of these two pairs, you're going to cover yourself. And if the like on the euro moved up 24, it's going to cover yourself on both. So the ability to make money by using options to protect yourself on the direction that you think the market's going to go is definitely possible, and probable that you can beat more than 12 to 13 pips each day if you get the right direction. You still have to pick the right direction in the end of the day, but as long as the markets move, you'll be doing generally quite well. And at the moment the markets are moving a lot. You do have to check the pricing though. So how do we check the pricing again? Just to finalize this, had to extract all these I did a lot of trades yesterday. Alright, so click on the trading area. So there's been a bit of volatility in the Asian session so far today. Trump announced new tariffs. Now that helped the Aussie dollar go down, actually break fresh lows at 74. So probably the Aussie dollar is going to go lower. Now if that's my view, how I would set it up this time is I would go sell on the Aussie, and because the market's really low, if I was selling this normally I'd have to keep a very close eye on it, but if I don't want to keep an eye on it, I can for the next 6 hours get protection. It costs 10 pips, so I'll check how much that's going to cost me to get 100,000, 135, and that's protection on the upside. Okay. So 10 pips is a little bit more than yesterday. It was 9 pips yesterday, but the market has been moving a lot more today. Aussie dollar, you can see here, has been moving around. Okay, but we've got a new trade now. The Aussie dollar's just broken fresh lows on the daily. So we're looking for it to go lower in the European session as well. And so we'll express that via our Aussie dollar short trade. And in case the market does go up, I've got the protection here. And so all in all, the most I can lose now is going to be 12 pips for the next 6 hours. But the ability to make a lot of money from the market going down or just being volatile is extreme here. So I'll keep you an update as well on how this one works out. But I do encourage you to try this out yourself. You can go onto a demo account and try a trading strategy using this product. Okay. If you think the dollar yen at this point is going to be dropping lower, the dollar yen's under a lot of pressure as well. So if you see the potential payouts, how much does it cost? It's a bit more expensive, $12 for 6 hours. So we increase the risk to around 150. Alright, then we're allowed to sell on the break here with a little bit of protection, just on the speculation. Okay, so always check the pricing. If there's a news announcement, there can be override pricing, so the market might be a bit more expensive. and this one's not, it's just moving around a lot. Euro dollar, 12 pips currently. The best time probably for Asian traders is going to be a little bit closer to the European session, so you get more exposure to the volatility. But something that you can keep in the back of your mind when looking at these charts and trading is that you'll always have this option to buy protection. You don't always need it on your day trades, but if you have a trade open and you're worried about it, and say you're long dollar yen right now, and you're worried about what's going on with the dollar yen breaking, and you want to give yourself a 6-hour pause at the start of the European session, hopefully it can get back above 110 for you. Then in that scenario, you can buy this as short-term hedges against your current trades that you have. Alright, so that's another tool that you can use for these. And you know, if the market does end up going higher, you're not stuck in a long-term long and short hedge. You're just stuck in that short-term 6-hour hedge, and things looking better 6 hours later. You're not going to be losing a lot of money if the dollar yen goes back to the uptrend. Alright guys, there's a lot to be said about this, but we'll end this discussion, this more advanced video now at this point. Don't hesitate to give us a call here on the Sydney desk if you have any ideas and want to discuss it. You know, we are here to help in this regards as well. And look, if you do see an opportunity and you want to discuss it with a dealer, don't hesitate to call us on that as well. We can talk about the levels and the numbers and assist you with your trading. Alright, thank you.